This is a download from BFM 89.9, the business station.
Morning, Dodge. So OPEC has ruled out production cuts and oil prices have also moved up strongly above $40+ per barrel ahead of yesterday's meeting. What is your sense of where prices will go from here?
Well, good morning, Julian. Well, the direction will definitely be down. One of the main reason why oil prices were going up was it was based on the world's two largest oil producers agreeing to work together, Russia and Saudi Arabia. But as the meeting continued, Saudi Arabia has insisted Iran should be part of any agreement, and rightfully so. And they weren't there, so what we've been seeing in the prices, they've been on a steady downturn. 6 o'clock Sunday night our time, they had reached $40. They were $39.71 per barrel, and then they went down to 39 flat, and then at 6:06 a.m. Singapore time, the price of NYMEX had dropped as much as $2.75 to $37.61. We suspect that there will be some floor around the 35 area for the short term as the world waits to see what the impact of future talks being, the notification is that there will be future talks and that Iran will be part of them. And we'll just have to see. We'll have to see if Iran has enough of a reason to agree to some kind of halt in their production and delivery of oil.
So this is really interesting because we saw reports earlier on in the year about oil prices heading towards the $20 per barrel kind of level. And in 2015 as well, global oil and gas stocks lost about $300 billion in value. Do you think such stocks will see better times this year? Are you hoping for something there?
Hope is a dangerous word, Julian, especially when one is making investments. And at this point, I think that there's going to be continued weakness in the smaller companies. Now, some of the larger ones, Exxon, Chevron, that type of company which has a very well-diversified good management and is a potential source of alternate sources of income, I suspect that they will find some support in the short term. But the real question is, on the smaller firms that are really looking for and need the higher price, higher than now, from like $45 to $50 a barrel in order to make sense, it's really questionable what they are going to be doing in the future. So we may see some consolidations, and also those who are providing alternate sources of energy will probably have to halt or at least delay their expansion until it becomes clear that the price of oil is on its way back up.
Now, there had been many closures of fracking rigs in the United States. Are you expecting more drilling cuts after the latest OPEC move?
Well, first of all, it takes a great deal of time to cut and to close the sources of drilling, et cetera. And once they're closed, it takes a great deal of money and also time to get them back up again. So I don't suspect that the decision to cut will be taken in the short term just based on the current news from the talks, because I do suspect that there will be some future negotiations between now and June when the next meeting is supposed to occur. I do suspect that Iran's going to be approached and there will be news. So oil will probably go back to trading as a commodity and be very volatile both up and down as news comes out. So I don't suspect that kind of environment, Julian, is the kind of environment that will force those who have a longer-term strength and fortitude to cut further, but also it will probably delay any kind of returns to increasing output.
Talking about the United States, the first results from this earnings season are trickling in. They have been a mixed bag. There is some consensus among analysts that things don't seem too good on the earnings growth front. Are you looking for a silver lining?
Well, it's true. We did see some bounce in the banks, for example, when last week was a big week for the banks, but by the end of the week, they had returned to their previous downtrend. We suspect that over the next, as we get through earnings, those companies that will outperform in terms of future revenue expectations, they'll be the companies who will have a bounce in their price per share. it may not be long-term in nature, Julian. And what we've been seeing is that the first reaction to earnings announcements is followed by a fairly quick reverse in direction, whether it's up or down, doesn't matter. It just is much faster than what we've seen in the past. But one of the things we suspect that there appears to, first of all, our housing is looking fairly strong now and supporting future growth. Secondly, there seems to be a greater confidence in what's going on, what is expected at the end of this year and the first quarter of next year. We're looking at Thomson Reuters has a week in earnings that looks out for 4 quarter estimates, and their estimate for the first quarter of 2017 is up higher than the usual expectations, and that's also, by the way, Julian, that's after our election, which will be a big political resolution, one way or the other, and its impact on future earnings will be much more determined at that point. So we are seeing a higher than expected earnings growth in the first quarter of 2017. So it's either an erroneous data point on Thomson Reuters, or the street is looking for faster earnings growth starting in the first quarter of 2017. So short term, I think there are some questions. The questions have to be resolved to the upside. But as you get further out into this year and the beginning of next year, I think then you'll begin to see the market being valued more on economic fundamentals rather than the low interest rates.
Dodge, what do you think is Wall Street saying about the presidential candidates right now on both sides of the divide? Are they getting more sensitive now to what they're saying closer to the elections?
Yes, indeed. In fact, New York City is going to have a primary election, a primary vote this Tuesday. So we're beginning to see that the after effects of the political process are becoming much more sensitive and much more in focus of people's eyesight at this point, because we are getting close to the end of the primary election, and of course we have the summer, and then ultimately, finally, we will get to the elections. It's been just a long season, Julian. And yes, we are seeing it, particularly here in New York. It is becoming much more in focus, but that doesn't mean that there's been a real decision. There hasn't. It's just that it's become much more a part of one's observations as one makes investments.
All right, thank you. That was Dorland, Chief Investment Officer at Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.